Good evening to all the participants. I welcome you on behalf of Madras Tax Bar to our 113th webinar. Today, my friend and advocate, Mr. Sai Prashanth, has chosen to give the talk on the very burning judgment of the Gujarat High Court, which has held the rule 89.5 as ultra vires. So, I mean, this is a very interesting topic and a good debatable topic also. So after end of Sai's presentation, we will have the question answer round where uh, you can put in your points and you can supplement, and we can have a discussion round accordingly. So you can kindly raise your hands in the app, or you can put in your messages or queries in the chat box. We will take up the question then. So thank you, Sai, once again, and over to you. Sai, over to you. Sai, are you able to hear me? Oh, I'm sorry. I thought I already unmuted.
Thank you, Prithvi. Can you hear me now?
Yes, Sai.
All right. Good evening, everyone. I thank the Madras Tax Bar for having me again on this platform for having the presentation on this topic, which is, as Prithvi said, a very recent one. The Gujarat High Court has last week held that the rule 89.5 of CGST Rules is ultra vires the provisions of the Act, which basically has something to do with what you generally call as the inverted duty structure. So I have a presentation. I'll just share it now. So what we'll do today, I just share the agenda also so that we can have, yes. So we first look at what is inverted duty structure, very basic, just conceptually what exactly it is. And what was it under the earlier regime, that is prior to the introduction of GST, how was the inverted duty structure dealt with? Just after quickly going through that, we'll jump into the core provisions which were dealt with by the Gujarat High Court, which is section 54, subsection 3 of the CGST Act and the rule 89.5 of the CGST rules. Then after dwelling and analyzing these two provisions, we'll move on to how the department had understood the provisions of section 54.3. We basically will be looking into the CBSE circular, which was issued expressing their views on what was the reason for the amendment and how they perceived 54.3. And we'll also be looking into one and probably the only reported advanced ruling decision expressing on merits as to whether or not on what exactly the principles were under the amended 89.5. Then we'll get into the hot topic, which is the decision of the Gujarat High Court in the VKC footsteps. What did they say? It's definitely no doubt a great decision for the SSEs, but did they miss out on a better reasoning is something we'll be also seeing. Then finally, we'll be looking into what are the implications of the decision and what is the way forward for the SSEs. So what is inverted duty structure? Inverted duty structure, just in layman's terms, means when the input rate is higher than the output rate. So as we all know that to manufacture anything, we will need an input. So the input, if say, for example, in the scenario 1 that we're talking about, if steel is required for the manufacture of a passenger car, and if steel is taxed at 18% and the passenger car is at 28%, then there's no problem for that particular manufacturer to the extent that he can use the 18% as what you call as input tax credit and set it off against your output liability on the passenger cars. The entire problem arises because of situations such as scenario 2, where, for example, the same steel, if it's not used in a passenger car, but instead if it's used in a tractor, say, the tractor is taxed at a lesser rate of 12%, and therefore what happens is there is an accumulation to that extent in the hands of the SSE. Over a period of time, the difference of 6% gets accumulated in their hands, and this is what leads to a situation of inverted duty structure. Another small thing which probably is worth noting is inverted duty structure in its sense means a difference in the rate of tax and not the value of tax. So what does this mean? For example, I explained this difference of 18% and 12%, then this leads to inverted duty structure. But if we substitute the percentage with values and say, for example, the steel is, I get an input of steel at 100 rupees, but my output is at 80, then will that also amount to inverted duty structure? The answer is no, because either in generic understanding as well as the principles in our law under GST, they both talk about rate of tax and not value of tax. Moving on, so what was it? How did they deal with inverted duty structure under the earlier regime? There was no provision directly addressing this credit accumulation on our duty structure under the erstwhile regime. The assessees had to be a little inventive in diluting their credit. For example, under Rule 18 of the Central Excise Rules, they can opt to pay duty on their exports instead of exporting without payment of duty. What this does is this reduces their credit balance and they get a refund of the same amount in cash. That's one method. Another method probably which I can think of is at the end, there was a concept of LTU, which is a large tax paying unit. Rule 12A of the Sinvat credit rule said that when I have multiple units pan India, I can transfer my credit from unit A to unit B. So this was also one of the methodologies adopted by the assessees to dilute their credit accumulation. Agreed that Rule 5 of Sinvat credit rules, in fact, provided for refund of accumulated credit. But the catch was such refund was limited to instances where the accumulation was on account of exports. So per se, the earlier regime did not deal with an inverted duty structure situation. So what happened now? Under GST, one of the key features was said to be uninterrupted and seamless chain of input tax credit to avoid cascading of taxes. If we see the discussion papers, the GST council meetings, all of them uses this catchphrase where they kept saying that we want everything to be seamless and we don't want any person to suffer because of accumulation. So keeping this philosophy in mind, when GST was introduced in 2017, a refund mechanism for inverted duty structure was introduced under Section 54(3) of the CGST Act. Now let's just dive right into what the provision says. This is the actual extract of the provision. We can just read it once for better understanding. So what it says is 54 in general talks about refund under GST and the different provisions such as time limit, what happens on unjust enrichment, etc. And also talk about specific instances such as 54(3), which is on unutilized ITC. So let's just read it once quickly. Subject to the provisions of subsection 10, a registered person may claim refund of any unutilized input tax credit at the end of any tax period, provided that no refund of unutilized input tax credit shall be allowed in cases other than this. There are two instances here. First one is zero rated supplies made without payment of tax. The second one, which we are concerned with today, is where the credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on output supply. Let's just stop here and examine the two instances. So if you see the main provision, the body of 54(3), it uses the phrase refund of any unutilized input tax credit. And again in the proviso, the beginning of the proviso, it uses the same phrase unutilized input tax credit. So these two bolded portions are the ones relied upon by the assessee to state that unutilized input tax credit will cover everything under its ambit, inclusive of input services, and therefore the amendment which was now brought into 89.5, which we'll be seeing in shortly, restricting it to just inputs is incorrect. Whereas on the other hand, what the department says, the department relies on the underlying portion, which is the proviso second point, where they say where the credit has accumulated on account of rate of tax on inputs being higher than that on the output supplies. So the department says the legislature has used the terminology only inputs in the proviso, and therefore the entire inverted duty structure mechanism is limited only to inputs, and input services are not envisaged under the concept under the ambit of 54(3) at all. So this was all how the department argued. Now let's say what the rule said when it was introduced. Rule 89.5 spoke about inverted duty structure, and as introduced, the formula was pretty simple. It said the turnover of inverted rated supply of goods plus the turnover of inverted rated supply of services divided by the adjusted total turnover into net ITC. So our entire problem revolves around the interpretation of what net ITC is all about. As introduced, there was an explanation to 89.5, which said net ITC means ITC availed on inputs and input services during the relevant period. So this was how it was introduced in 2017. In 2018, there was an amendment to this particular formula. Everything else remained the same, but the definition of net ITC was changed. What was the change? There was a removal of the strike through portion which says and input services. So after the amendment, net ITC means only ITC availed on inputs. So input services as a concept was completely omitted from 89.5. So two notifications become important when we talk about amendment here. The first one is what we see as the amendment dated 18/4/2018. This was the amendment which omitted input services from the ambit of net ITC. But what happened subsequently, 2 months later, is in the month of June, they made this amendment retrospective. So these two amendments were technically what were challenged before the Gujarat High Court, which we'll come to in some time. So also becomes important is the how 89.4, which is another rule, like we saw in 54.3, there were two instances that were dealt with. One is for inverted duty structure, the other is for zero rated supplies. Zero rated supplies also had a rule, which is rule 89.4. But here net ITC was defined and defined to mean both inputs and input services. Even though this is not directly covered in the judgment, why I'm making a reference to this is because one of the arguments that were made in the Gujarat High Court was when this covered both inputs and input services, there was no logic or there was no intelligible differentia for 89.5 to cover only inputs. That's why I'm highlighting this here. We'll come to that point in some time. So after the amendment, there was a circular that was issued by the department. The department said that there were a lot of points discussed in the entire circular, and one of the points was what was the reasoning behind the amendment. So they said 54.3 provided that refund of any unutilized ITC may be claimed where the credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on output supplies. Further, Section 259 defines input as any goods other than capital goods used or intended to be used by a supplier in the course of business. Thus, inputs do not include services or capital goods. This is important. Therefore, the intent of the law is not to allow refund of tax paid on input services or capital goods as a part of refund of unutilized ITC. Accordingly, in order to align the CGST rules with the CGST Act, the amendments were carried out so as to prevent refund of tax paid on input services and capital goods on account of inverted duty structure. So the understanding of the department was 54.3 read with the proviso, obviously, covered under its ambit only inputs as a part of the unutilized ITC and never envisaged input services. This was the logic behind what the circular said. This was basically because the proviso used the word only inputs and not input services, which we saw. Now, after the circular, the SSE Daewoo Tata Power Limited approached the advance authority in Maharashtra, and they asked for whether input services is covered under the ambit of 89.5 post amendment. So the AAR said that they are not covered. But what's interesting again is the reasoning behind why they say we are not covered, and that again leads us to the first point which I mentioned there, as whether section 54.3(2) of the CGST Act talks of where the credit is accumulated on account of rate of tax on inputs being higher than the rate of tax on output supplies. It is clear that this clause speaks only in respect to credit available on inputs being higher, that is credit on tax paid on goods being higher. So again, they rely on this proviso talking only about inputs, and therefore they say input services not covered within the ambit. Then they also go on to the definition of net ITC, which is defined under the 89.5 again. They say that the definition of net ITC only considers input tax credit on inputs for computing the amount of eligible refund, and therefore any portion of ITC available on input services is not available as refund. So from the circular and from the advanced ruling, what we understand is the department all along thought that 54.3, which is the statutory, the legislative provision itself, never envisaged input services under the ambit, and their reasoning for thinking so is because of the proviso. Now let's see what the High Court said. The High Court said, what was the question before the High Court? The explanation, whether the explanation to Rule 89.5 is ultra vires section 54.3 in as much as it denies the refund of ITC accumulated on account of input services. This explanation basically defines what net ITC was, and the amendment said input services not eligible, which we saw a little while ago. The main arguments for the assessee were as follows. First one is what they said is there is nothing either in 54.3 or under the proviso to restrict the refund to ITC on inputs. Just elaborating a little bit on this argument. They said 54.3, the beginning portion says unutilized input tax credit. The beginning of proviso also says unutilized input tax credit. Then they also explained as to what the meaning of inputs meant under the proviso. They said that means whenever my input rate is higher than my output rate, I will then be eligible for the entire ITC. So they said it is only one of the circumstances under which the inverted duty structure kicks in, but does not mean the quantum or the eligibility itself is restricted to only inputs. While they have mentioned this as an argument in the arguments portion, it has not been considered in the actual findings. We'll come to that shortly. Then secondly, they said the formula under 89.5 whittles down the effect of the word any employed in section 54.3. Such an exercise cannot be considered as a rule for carrying out the provisions of the Act, thereby rendering it violative of 164.1. Like we saw under 54.3, it says any unutilized input tax credit. So the assessee relied on many decisions to say what any means, and any is always supposed to be understood in the most widest ambit and cannot be whittled down, etc. And thirdly, which is why I explained 89.4, is they argued that when a refund of unutilized ITC in respect of input services is permitted in case of zero rated supplies, which is 89.4, there is no intelligible differentia supporting rejection of refund of such ITC on account of inverted duty structure alone. So they said when 89.4 specifically covers both inputs as well as input services, there is no reasoning to say 89.5 alone will be restricted to inputs. So what did the court hold? So they went through a string of definitions under the GST Act. First, they saw the definition of, first they saw that 54.3 provides for refund of any unutilized ITC. So then they looked into the definition of what ITC meant. ITC is defined in section 263 to mean the credit of input tax. Then they looked into what input tax meant. The phrase input tax as defined in 262 means the tax charged on any supply of goods or services for both made to any registered person. So they looked into the two words of goods and services and then looked into the definition of what an input is and what an input service is. The term input is defined in section 259 to mean any goods other than capital goods, and input services as per 260 means any service used or intended to be used by a supplier. So they looked into the definition of input tax credit, input tax, input and input service, and they said input tax covers both input as well as input service, and therefore both input and input service will be a part of 54.3. They said input and input services are both a part of input tax and ITC. Then they also said that the legislature under 54.3 has provided that a registered person may claim refund of any unutilized ITC. They don't have any stress on any, but they just mention it to be a part of their judgment under courts. By way of 89.5, such claim cannot be restricted only to input. Then lastly, they also say, moreover, clause 2 of the proviso to section 54.3 also refers to both supply of goods or services and not just goods. So relying on this portion, which is actually something which should not have been relied upon by the Gujarat High Court with all due respect, they relied on this to say, since clause 2 covers both goods as well as services, it should cover under its ambit both inputs as well as input services. And therefore, they said input tax credit cannot be restricted to inputs. So what were the finding, the actual conclusion? They said explanation A, which defines what ITC or net ITC is, to rule 89.5, which denies the credit of unutilized ITC paid on input services as ultra vires HN 54.3. Then they said explanation A is read down. They said net ITC should mean input tax credit available on inputs as well as input services as defined under the Act. Then thirdly, since the petition also had a direction to the department as a mandamus petition, they directed the department to allow the petitioner's refund claim considering the unutilized input tax credit on input services as a part of the net ITC. Now, there's no doubt that this judgment is extremely beneficial to the SSCs, etc. But on a cursory reading of the decision, one will some of y'all might get an idea that it could have definitely been better reasoned. What is that better reasoning that we're looking for? One thing that I could think of is they have not dealt with the proviso properly. So what is this proviso? Let's just read this proviso once again. It says, provided that no refund of unutilized input tax credit shall be allowed in cases other than zero rating, which is not relevant to us. And secondly, where the credit is accumulated on account of rate of tax on inputs being higher than that of output supplies. So in the underlined portion of the proviso, how are we supposed to read this? Are we supposed to read this as only a circumstance under which the entire ITC is to be refunded? That is, if my input rate is higher than my output rate, then I will go back to the beginning of the proviso, which still says unutilized input tax credit, which covers both input and input services. Or do I read the underlined portion to mean a restriction on the entire input tax credit only to the portion of inputs? So this is not addressed in so many words in the Gujarat High Court judgment. They have only said that it uses the word output supplies, it covers goods and services under its ambit, and therefore will have to necessarily include inputs and input services. This is their reasoning for it. But the entire debate boils down to how we read this portion of the proviso. If we read this portion to say that it is only a circumstance, then we give full play to the beginning of the proviso, which says refund of unutilized input tax credit. Whereas if we were to go by the interpretation of the department, where they say input rate is higher than output rate, means only the ITC on inputs will be refunded. So if that be the case, then the proviso is restrictive in nature. So how to read this is again a point of interpretation, which probably some other challenge in the future will have to answer. But generally looking into what a proviso means, proviso is intended to limit the enacted provision so as to accept something which would have otherwise been within it, or in some measure to modify the enacting clause. This is what the Supreme Court has said in one of the decisions. So if this was the interpretation to be given, then can the department's understanding that while the main clause says input tax credit, the proviso specifically uses the word only input, mean that only input is covered under the entire inverted duty structure? This is definitely one of the arguments which will have to be considered sometime in the future to be answered. Another thing which is important is Section 2 of the CGST Act begins with the phrase, unless the context otherwise requires. So like we saw, Gujarat High Court has extensively relied on different definitions of input tax credit, input tax, input capital goods, etc. But the phraseology under Section 2 it starts with unless the context otherwise required. So can we say here that since the Proviso is couched in a language where they use only the word inputs and not input services, can I use this phrase to say that here, even though the term is input tax credit, I will have to read this down to mean only inputs. This is again something which the courts will have to answer after deliberating. Another point which, though I've not mentioned here, I feel is something important is um, this again will be something to be interpreted because this is a Gujarat High Court decision and the assessees may be in different jurisdictions. For example, we faced this with the issue of the time limit also, where once brand equity in Delhi High Court said so, and we tried taking benefit of it in Tamil Nadu, they said that's for Delhi, this is for Tamil Nadu, and therefore it may not be possible. So that's again one battle which we'll have to overcome. So now what is it? What happens to the going forward? What happens? So first thing is from now on, all assessees can claim refund of both inputs and input services using the decision. Well, again, this will be subject to a further appeal by the department and then obtaining stay. So it will be assessees may have to be a little vigilant here and approaching the courts for swift refund measures. But what's interesting is what happens to the past periods. So here we'll have to segregate this into two. If the initial claim that was made included input services within its ambit, and if it didn't. First one is if my initial claim included the input services, and if that claim is sub judice, that is, if it has been filed and not been adjudicated upon, or if it's adjudicated upon and you've appealed against it and that appeal is pending, then the decision of Gujarat High Court can definitely be used to claim credit of the input services. But what happens if that claim stands rejected and not appealed against? So here it's a little tricky because the list is not pending anymore, and therefore you may not be able to bear the fruits of someone else's efforts, and therefore the court might take a view that you cannot claim benefit of the refund now. Well, I mean, when I say not appealed against, it's obviously implying that the appellate period has expired and therefore not appealed against. Now coming to what happens if the initial claim was only for inputs and did not include input services at all. Can the assessee now take benefit of input services? The answer is in the neutral to the extent that the provisions do not specifically say or enable or restrict the assessee from making a supplementary refund. So the assessees can definitely attempt making a supplementary claim for the input services. This is definitely subject to the caveat that it should be within the 2-year time limit as per section 54(1). And then coming to the last point, so the entire debate was on whether it's inputs or inputs and input services. But one important thing which has not been considered by the High Court because it was not before the High Court was whether capital goods can be part of the entire inverted duty structure. If the logic of the High Court were to be applied, then definitely capital goods can also form part of 54(3). Well, this will have to be challenged separately before any High Court for a separate remedy, but the logic seems to be squarely applicable. Another interesting thing is 18(4), though has not been amended or not been challenged anytime before, and says inputs and input services. Can this logic of the Gujarat High Court be extended to 89(4) also? To say 89(4) says input tax credit and therefore should cover inputs, capital goods, as well as input service under its ambit. This again will have to be challenged separately before the High Court to come to a conclusion. Another thing which I've not mentioned here, which I thought to just highlight, is what happens now that this decision is going to come out. Is there a possibility of the High Court, is there a possibility of the government coming out with a retrospective amendment like what we saw for section 140? And retrospective amendments can overcome all the High Court decisions. It's again something which we'll have to wait and see. So this is basically my understanding of the decision and the implications and the way forward. With this, I come to the end of my presentation. Thank you all for listening, and I thank the Madras Tax Bar once again for providing me this opportunity. If there's any questions right now, I'll take it. Thank you.
Thanks, Sai. It was indeed a very interesting presentation. Sai, you can turn off the screen share.
Yeah.
We can. So, if there are any supplements on this talk, or if there are any queries, you can raise your hands in the app, or you can kindly put in your messages so that we can start the discussion. So first, Rohan, we'll go with Rohan. And Sai, in the meantime, I think Vishwanathan sir has already put up a message in the chat box.
Yeah, I look into it.
Yeah.
Yeah,
Rohan?
yeah. Sai, can you hear me?
Yeah, I can hear you.
See, one doubt which I had, like it's just a thought process. See, going by the judgment, even capital goods refund may be eligible to me because unutilized input tax credit will also encompass within its ambit capital goods. But take a scenario because in GST capital goods credit, you are entitled for 100% credit upfront. And
Right.
generally, the utilization of capital goods happens in the course of 2 years, 3 years, etc. So even if I have one capital good, which is at a higher rate, because my final product may be at 12%, maybe at 5%, but capital goods will be at 18%. So because the value of the capital goods will be so high that it will obviously be there will be a credit accumulation because I have to utilize that over a period of time.
Correct.
So
Yes.
if I read it this way, then it will automatically whatever capital purchases that I make, if it is at a higher rate, which in all probability it may be at a higher rate, then I will automatically get the refund. There is an anomaly to that extent, right?
See, Rohan, I understand the logic is perfect. In fact, but the provisions do not reflect this logic is all I'm trying to say. In the provisions, if you read it just plainly, they use the term input tax credit, and input tax credit is different, right? So all I'm saying is, I mean, I understand the logic makes perfect sense, but having not reflected that logic into the provision, there might be a problem.
Rohan, if you want to.
No, I agree with what he's saying. Just that it was a thought which was occurring in my mind as to will they allow capital goods credit refund?
No, in fact, that logic applies to input services also. Now, if you say, for example, an input service may be common to an output which is at a higher rate as well as an output which is at a lower rate. For example, if I have a chartered accountant service, the chartered accountant audits my books and I say I manufacture one commodity at 28% and another commodity at 5%. I may not be able to appropriate the input service to which output supply it actually pertains to. But yeah.
But in that case, I feel that utilization will take care of it because input service at the end of the day, the quantum is low. So like even if it is towards a taxable supply, which it has a higher rate and a lower rate, the utilization will take care of it because that credit I'll anyways use. But capital goods, that is not the fact because the credit is so high that I will never be able to utilize it even in a month or in 6 months or something. So,
Yes, correct. Yes. Logic is correct, but unfortunately, the provisions do not reflect that.
Correct.
Vishwanathan sir, I think, has some different view about it. Vishwanathan sir?
Yes, Sai Prashanth.
Yes, sir.
Very well done.
Thank you, sir.
I have some question before that because Rohan has raised this question. I have a different point of view. I thought maybe if you approve, I just want this for education purposes. You see, capital goods refund was never considered even under the Central Excise law. What happens is if you are exporting any product, drawback is given only with reference to the inputs.
Yes.
It is rebate with reference to excise duty only is given. What is actually used in the final product on which you pay the duty? If it gets exported, they want to refund that duty. The capital goods which you use for manufacture of those goods or static goods, it's only given to you as a purpose of development of infrastructure and economy. It is not an inbuilt structure for you to claim a refund, as in the case of inverted tax rate, is my humble view. you may consider that the logic is this. The government logic is capital goods are only given as capital assets. It is not being used in where you pay tax out of that and a value addition is returned to the government. It's not happening. So
Yes.
capital goods may not get the benefit of this inverted tax rate also, is my humble view. You can deliberate on.
I completely agree with you, sir. In fact, if my understanding is correct, Rule 5 of the erstwhile rules also did not cover within its ambit capital goods. It only said inputs and input services.
You are right, you are right.
So the logic seems to be completely sound in saying it's only inputs and input services. But all I'm trying to say is the provisions do not reflect that. As of now.
Maybe that this argument is made before court, it may not even approve of that.
Yes. But as of now, it is something which we can definitely deliberate upon.
Yes, our job is only to deliberate, but we should know the background also, no?
Yes.
And can I put one question, Prathivi?
Yes, sir. Sure.
Yes. See, this present High Court judgment, according to me, appears where there is input and input services, both are involved. What happens if only input service is involved? Supposing that subcontractor pays 18%, I pay 12%. There's only input service difference. Then what happens?
Yes.
Can we use this judgment or not? Because I read this judgment to my limited knowledge. I don't find that kind of a proposition emanating from this judgment. It always talks about input and input services together.
Yes, sir. In fact, there is no challenge to 54.3 Proviso. If you see the judgment, the challenge is only to the rule. And 54.3 Proviso specifically says the input rate has to be higher than the output rate. So in your scenario where you're saying there is no input at all, then that condition of the Proviso remains unsatisfied. So therefore, the judgment will come of no use to that kind of a necessity.
But we are trying to take advantage of that. We cannot overrule it because the principle behind it, wherever there is an accumulation, you allow the refund. That seems to be the mind of the court.
Yes, but unless there is some amendment to the section itself, that becomes a little difficult. Here we are talking about the delegated legislation. Therefore, the challenge before the High Court became a little easier. But there we'll have to challenge the section itself in your scenario.
Like what our Hari has done now.
Yes.
Now, one more thing, I don't know whether you have gone through this 125/44/2019 GST dated 18/11/2019, where they tried to explain what is this net input tax credit. There's a circular where the dispute arose. Supposing I have 5 or 6 inputs in the use of the particular product, where I have only 2 products which is inverted rate, 3 inputs are not having any inverted rate, even then board clarify, the higher authority clarify that in such cases also, so long as there is accumulation, you can get it. That kind of a circular is there. That can also be made use of for this purpose.
Yes, in fact, the circular that I referred to, the 31st of December 2018 circular, also touched upon the quantification to some extent.
Right. Now, last question to you. Kindly others will bear with me. There is a Proviso 1, first Proviso, which says 0 rated tax if it is exported. You are entitled to. How do they work out the quantum of credit? Will they give me entire balance of the credit? Whether it is inverted, non-inverted, how are they going to work out that? Because I find 89.5, only net tax credit for inverted rate is provided.
Yes.
What is the formula for 0 rated tax?
So 0 rating will come under 89.4, which is I think what Nitin is also pointing out in the chat. But what they take the entire ITC, because ITC is a basket like you're saying and cannot be bifurcated between 1 and 2. Therefore, what you do is they take it and appropriate amongst the turnover. That is why if you see the formula under 89.4, they take the turnover of the 0 rating supply vis-a-vis your total turnover. So that kind of a proportion amongst the turnover will bifurcate the ITC on an artificial basis. That is
they don't distinguish between input service or input tax.
They don't do that. They don't do that. Yes.
Thank you very much. Well done.
Thank you, sir.
Thank you, sir. Next, Jayakumar, sir. I'll unmute. Jayakumar, sir.
Yeah, Sai, you did a good job.
Thank you, sir.
I'm trying to pick up the subject. I don't know much, but nevertheless, you gave an example of a chartered accountant. Now, take a case of a lawyer or a big five, big four. They give you composite service. In one place, GST is directly paid by them. In other case, is reverse mechanism. How will you adjust this ITC credit to, what do you call it? It's not directly traceable to a particular service.
That's correct, sir. Sir, ITC, even under the GSTR 3B, which is now operational, if you go by the practical aspect also, there is no bifurcation between input services, and capital goods. That is why the net ITC is taken as a whole, and the bifurcation is done at the end of the turnover. So the turnover will determine how much ITC I'm eligible for as refund. So that is since they are not able to bifurcate the ITC because it becomes a common pool, they bifurcated with use of the turnover as one of the criteria.
That's only a rule of thumb, no? Or is it a mandatory?
In the sense, sir?
Is it a rule of thumb or a mandatory?
No, that formula will have to be applied to compute how much I'm eligible for. So that has to be mandatory, yes.
Thank you.
Thank you, sir.
Next, Mr. Rahul Jain.
Hello.
Yes,
yes, Rahul.
Hi, Sai. Good presentation.
Thank you.
A couple of queries. First is in respect of input services for the past. Now, we are given to understand that the refund claims are usually filed for a particular quarter, and the systems do not enable me to refile refund claims for a quarter once it's already filed. So what happens in such a scenario? Can I now again file a refund claim for the past period? I understand that during the course of your seminar, you said that this position is neutral. But if he wants to go ahead and claim the refund of the input services for the past, how does he go about that? Added to this, the HC is also claimed an expenditure of the input service credit in his income tax. Is there any bar like capital goods where once I have claimed a reduction under the Income Tax Act, can I still go in for a refund of the input service? What is the mechanism for that?
Okay. As regards your first question, Rahul, yes, this system definitely does not support a subsequent filing of a refund claim online. I completely agree to that. But at the same time, there is no prohibition, unlike what we had in the earlier regime where they said you have to file only one refund claim per quarter, etc. There is no similar provision under GST. So, I mean, just to work out a middle ground, what I feel is we can probably file a manual refund claim by writing a letter citing judgment and work out the past penalties. So that is the answer to your first question. Second question, the income tax benefit ideally should not come in the way of your claiming this benefit under GST, because again, there seems to be no provision to say so, unless there is some judgment law which to come in the future to say otherwise.
Rahul,
yeah, but what happens from the income tax perspective is once I take this amount as an expenditure, it no longer remains as an asset. So once it's an asset, SENVAT is usually classified as an asset. Once it's not an asset, it's definitely a challenge for claiming of the, because the character of the tax no longer remains tax, but it's covered and classified as an expenditure. So that's a challenge which ASIS will have to overcome. That personal view. Though I think other views are also possible.
What you're saying is definitely a view.
If I may add here, subject to Sai and right, if we are talking about inputs etc. or input services etc., we don't have the problem like depreciation which we have in capital goods.
Capital goods, yes.
Okay. If we are talking about unjust, no, I listen to that and I'm saying this. And if we are talking about unjust enrichment, And if claiming it as an expense or expending it out in the profit and loss account, will it amount to unjust enrichment? That will be a different debate altogether. I mean, maybe we can still argue that just because it is part of profit and loss account doesn't mean it becomes part of the pricing. So pricing may be a different calculation than the profit and loss account, but that we may have to have a debate on that. Yes, even I don't have a direct answer on that.
Yeah.
Maybe Sai, if he has anything he can add, Rahul also can add, others can also add. But I still feel there is a slight difference between pricing and profit and loss account.
Because applying solar pesticides, there's definitely a difficulty once it's expensed out. So I think to prove unjust enrichment is a bigger challenge, as you rightly said.
Yes. I mean, to qualify as a part of the refund claim provision, yes, definitely you will come through somehow or the other, because even though it becomes an asset, it still remains to be a part of your books. But to overcome unjust enrichment will definitely be a problem.
Okay. Thank you, Sai.
Thank you.
Thank you, Raghavan sir. Is there any other points which anyone wants to supplement on? Joseph sir, if you want to supplement on any of the points discussed now, we would like to hear you also. JP sir? I think JP sir is not there. I think we've almost dealt with this entire session now. I don't see any further questions. So anyways, I would call upon Hari sir to kindly give the closing remarks of today's session, and then throw some light on his the notice which was ordered by court today on his comment also. Hari sir?
Yeah, I am here.
Yes, sir.
Yeah. No, only on today's proceeding, or
No, today's proceeding also we would like to hear a couple of points if it's suitable, and of course, and about Sai's session also, your views on Sai's session and what are your thoughts about it. Yes, sir.
no, that he has covered all the aspects, so nothing much to add on that. Only today, what transpired was about the that section 140 retrospectively amended in terms of section 128 of the Finance Act. So the earlier decision in the case of SR Money Electronics, the High Court already took a view that it is mandatory. The Rule 117 is to be construed as mandatory and not directly, and also said that it is a concession. Therefore, once it's a concession, all the conditions connected to it has to be mandatorily followed. And High Court also relied upon Nelco India of Bombay High Court, and relied upon JM and Company to come to the conclusion that there is no vested right. So basically, what points were projected were that JM and Company, in fact, is in favor of the assessee, because there was the issue regarding section 1920 of the TNVAT Act, and where ITC was proposed to be denied proportionately, where the sale price was lesser than the purchase price. So that Supreme Court in that context held that you cannot say that this condition takes away any right, because availment of credit is considered to be a concession as per Supreme Court's wordings, and therefore for availment those conditions should be fulfilled. In the same judgment, last paragraph, para 18, they spoke about the retrospective amendment with respect to the very same provision 1920. That was held to be ultra vires and not acceptable because it took away vested right. That para 18 was not brought to the attention of the Honorable Court. So mainly the Honorable Court, after noting the judgment in JM and Company, and after noting advert of Punjab Haryana High Court, where SLP of revenue dismissed, and High Court in the case of Siddharth Enterprises, said that these three judgments were not considered earlier. Therefore, it would be appropriate that if the learned ASG files a counter and formulated 4 questions of law. The 4 questions of law, I don't recollect verbatim, but it was on the lines that ITC is a vested right, and it should not be denied to any other person. Cannot be denied or cannot be taken away by a subsequent amendment. And second, the principles of double taxations, because it is essentially to avoid tax on tax. So that was also formulated as a question of law, whether it would amount to double taxation. And third point was the significance of JM and Company and advert. So these questions were framed, and counter was directed to be filed on these specific questions on the next hearing. So I think they are on open mind. They are open to hear the matter again. But primarily, the CJ last word he uttered was, you claim it to be vested right. Let us assume what you say is correct. But vested right has not been denied to you. You're only given a time limit of 90 days to transition the credit. So if the vested right is totally denied, I would agree with you. But since there is a reasonable time limit has been fixed, how do you counter that? With these words, he concluded. So probably we'll have to convince him in the next argument that for utilization also under the previous regime, I had no time limit. I could utilize it whenever I want. So my vested right was not regarding to only availment, but availment and utilization, which could not be touched subsequently. Probably in these lines, we may have to convince in the next hearing. So let us see. By the time Bahubali sir and all these stalwarts would come, so it will be difficult for me. I request some of the bar members to support me in the next battle. Only battle is won, not the war.
But it definitely has a very interesting impact in the coming days now. Let us wait and watch.
Yes.
So thank you once again, Sai, for this excellent session. And thank you for thank you all, Vishwanathan sir, Rahul, Rohan, and Raghavan sir for supporting and supplementing on this talk also. So thank you once again. Tomorrow we will be again having another session by Mr. V.S. Jayakumar sir. The details of it will be shared soon. And this session will also be uploaded in YouTube. So thank you once again.
Thank you, Prithvi.